Hey guys, welcome back to the channel. I hope everyone is doing well. So, if you happen to be an Asian investor or Asian viewer, first, happy Lunar New Year. And then if I happen to have any Chinese subscribers or viewers, happy Year of the Dragon. So today, and well, I guess like 2024 should be a very good year. Supposedly, people that are born in the year of the dragon are probably really sagacious and quite fortunate. So let's hope that some of that good fortune is spread around. So I thought it might be a good time to go over Clip again, just because I haven't covered this in a while. So Clip has been having a rough time lately, but I was kind of wondering if they could wind up being like another Tesla. And for that, I went back into like the old annual reports and the semi-annual reports. So in the period ending 2023, they kind of had a rough start. So if you look at the on the right hand side, on the period ending March 31st, the net increase in net assets was actually negative. So that's a net decrease from operations. So that's kind of like a reflection of their of like the management of like the ETF. And then just for comparison, like if you look on the left hand side, like this other fund, I don't know what this is, but Pan Asia Dividend Aristocrat. That sounds interesting. Well, and then just as a comparison point, it's almost like a mirror image. And then if you notice, like also the distributions, the one on the left is actually much more conservative compared to the I guess like the clip. And then of course like there's a return on capital here, so I think they could probably do a better job in terms of that management there. And just for comparison for September 23, now this is more interesting in that you can see that they actually had a like a positive return from like the operations. So I take that to mean that they're when they're selling covered calls that they are actually making money. So that's actually a good sign. I was actually expecting it to actually uh, I guess continue on a downward spiral. But the only bad thing here is like their distribution over here is pretty aggressive. Like I mean, it's almost like triple, actually almost quadruple like what they actually made. So there's definitely room for improvement. But then if you notice over here, like the return on capital was zero. So this is very interesting. I just wish there was more, I guess, like either CPAs or maybe like tax attorneys. If you happen to be one and you happen to understand like how this is possible, please let me know in the comment section below because I would definitely love to dive into this more because like just on the surface, even though this is unaudited, this is still in their financial statements, so this is kind of interesting to know. Like, how can you pay out this much in distributions, but then there's nothing in terms of return of capital? So anyway, so I also looked at the Google Trends over like the course of the year. So there was like a point where Clip actually, in terms of uh, people's interest in maybe like the ETF, that it actually surpassed Tesla. But then like over time, as you can see, like it kind of just like I guess the interest just died completely. So that's not good. And then in terms of positioning, I try to find like as much detail as I could, going back to like around January 2023. So the net assets just started off like almost like 2.5 million, and the net asset value at the time was pretty respectable at 24.65. Unfortunately, I couldn't find the actual like shares outstanding, but then I just did like some quick and dirty math, and that gives you an estimate of like 100,000 shares. And then you fast forward to February 2024. Again, I think they could do a better job of maybe creating like another box on like the website for like the shares outstanding. That would definitely make the analysis a lot easier. So they had a nice bump up in terms of like asset growth. So it was almost like 50 times. So it's like 107 million. But unfortunately, the net asset value over time has decreased to 14.26, and that's just again using back of the napkin math, like the estimate of about 7.5 million shares outstanding. So that takes us to like in terms of asset growth, it's about 42.5x. But unfortunately, the shares like there's more a lot like a lot more share growth than asset growth. So it's like 74.2x. So that to me means like it's a big womp womp. It's unfortunately over touristed. So I guess like over maybe over time, people will come to the senses. Like I guess like some people that they can't take the pain of like the net asset value decline. I guess I'm hoping that over time they'll kind of sell out at a maybe like just for the like their own like tax planning, like maybe take a loss and then apply that loss to like whatever gains that they have in the portfolio, and then over time like the assets and the share growth assets growth will kind of like be more in lockstep, because right now like there's not enough assets to go around and there's too many folks in this ETF. So I just want to go over like the pros. China has started like some stimulus measures. So I'm hoping that some of that will flow into this particular ETF. Like so, like the underlying ETF is KWeb, and then hopefully that'll also help like KLIP. So and then I was actually pleasantly surprised to see that they did have positive management performance. But I think like just in general, people just need like a good balanced portfolio. So make sure to have some treasuries, some dividend aristocrats, etc. And then of course like there's always risk, and like the expense ratio is kind of high. We don't have any control over the option strike selection. The implied volatility could collapse, although the implied volatility is pretty decent in here, I would say. But there's a problem of like I guess just too many people crowding in. So I guess that people are just yield chasing, and just like obviously the price has gone down, and yields won't be month to month, and we can't borrow against these type of shares. And I would definitely say like they have a very aggressive distribution policy. I'm hoping they can kind of, even though they scale back like just half, I think it's still very competitive rate. So and then of course like I'm hoping for peace, because I would hate to see any major countries like go to war, and that's not good for anyone. So if you like this type of content, please consider giving this a like. All subscriptions are welcome. Uh, Thank you for watching, and I hope everyone has a prosperous new year, regardless of who you are or where you are in the world. Thank you for watching, and I hope you have a great one. Bye now.